Well, hey everybody, hope you're doing well. Just want to check from a few of you. Should be able to see the screen and you should be able to hear me as well. Yeah? Fantastic. All right, well, want to start on time, which is good. We only have 45 minutes ahead of us, so I will push on. Firstly, thank you for joining me today. It's just gone 4 o'clock GMT here. This is Sam Evans with you of Online Training Academy, one of the lead instructors in the futures and the Forex asset classes as well, a monthly regular on FX Street. And FX Street, thanks for giving us the privilege to be here as well. What are we looking to go through in this time that we have together? Well, I've done quite a few webinars with you. I prefer working on the charts. I literally have a handful of slides which I'm going to share with you, just to kind of talk about something that I get a question about a lot. I do tend to travel around a little bit. I mean, I'm based in London, but I don't really do any work in London. While I'm in London, I just trade. I mean, I just trade at home. That's it. And every few months, I jet over to United States and I do some classes here and there and a little bit of online teaching. And no matter where I go in the world, I always kind of get people asking me the same questions. One of these questions being, Sam, what's your favorite tool? What's your favorite technical tool? What's your favorite technique, if you like? And I always respond with price. And a lot of the time, the majority of the time, in fact, I get kind of a raised eyebrow. People just looking and go, what? And I'm like, well, the price itself. Why would I focus on anything but the price first and foremost? Because price, is basically the cause of everything else is derived from price. It's the number one source. I thought I'd expand on that a little bit today as well. Try and break down some of the barriers, demystify things as well. I'm the first to admit that I don't ever have a clue what's going to come next in the market. I like to just focus on what I see on a price chart, and price alone tells me everything else I need. This doesn't mean, however, that technical indicators are redundant. I'm not here to backhand or verbally dismiss any other technical tools, but just to look at a kind of more practical way of approaching it. I had a question just before I begin as well, which I'd just like to answer. And yes, I know you might have had the pleasure of joining my colleague Sam Seiden earlier on today. Sam Seiden was my mentor a number of years ago. I think it must have been, wow, about 6 years ago now. I worked with him one-on-one. I actually developed a lot of curriculum and content for Online Trading Academy with him as well. And I've worked with him since I was actually on the phone with him just an hour ago. So yes, I am very much along those lines. And I worked actively with Sam Seiden to really promote the Online Trading Academy, the Online Trading Academy core strategy. So I know that question was sent to me. I hope that answers. Okay, very good. So let's just go over to here then, and literally, I just have a handful of slides that I would like to go through. One of the things I invite people to consider when I'm talking about this, okay, is that a lot of the conventional tools of technical analysis I found in my own experience here can often be misleading traps. If ever you've heard of one of my webinars before or my colleague's webinar, Sam, you'll know that we like to talk about things from an institutional point of view. What do the institutions do? How do they approach the market? How can we emulate them in more of a reliable fashion? Okay. Be aware. Well, the first way is to just be aware. Be aware of information and education that's out there. I've kind of made it my duty and one of my passions to try and educate people in the ways of the market, to do it in a safe manner, because there are many obviously dangerous ways of going about it. And one of the safest things to do is to kind of be aware that if you're using the same tools that everybody else is using, it's going to be more of a challenge for you to get the results out of the market that you necessarily want. I draw your attention right now just to this particular slide that I've got in front of you here. These are some screenshots actually from a broker's educational site that you're seeing here. And what I found this, I was like, wow, this is something, people need to be aware of. It was a little bit about basic technical analysis. And what struck me is really kind of stood out more than anything else. Again, and I'm not in any way, shape, or form attempting to kind of put somebody down, but I just think from a trading point of view, I was looking at these examples, and there was an example of what a great buying opportunity looks like. And there's this chart. This is just a screenshot of it. It was a chart, and they were saying, here's resistance. If price goes above resistance, that's a great buying opportunity. Or you can see price support across here. This is a great selling opportunity. Now, I'm familiar with breakout traders. On occasions, I will take a breakout style entry. And if you're wondering, if you're newer to this, what a breakout style entry is, it means selling when new lows are created. So as it breaks through the lows, sell here. It's a momentum style play. Does that make sense, guys? Or an upside, it's a momentum style buying opportunity. So you see you've got this high that keeps being put in here. Once price breaks above that high, then buy it. Well, to me, it struck me. I was like, well, I instruct my students to do the opposite. I get my students trying to buy down here, down near these lows, because then they've got all this profit margin between these lows and this resistance line as a profit target. And then if I'm trying to get my students to sell near the highs, okay, because if it does break down, they've got a much better profit margin. Does that make sense? I like to try and buy low, sell high, because I figured to myself, well, someone's got to kick off at those lows, haven't they? Someone's got to be in there from the start. Someone's got to be, taking the opportunity at the lows. So why would I go buy after everybody else has bought? There's a danger in that, because the thing is, I don't like buying too high. I certainly don't like selling too low, because in my experience of doing it, I've had my wrist slapped a few times. Maybe some of you guys kind of know what I'm talking about as well. Now, don't get me wrong, breakout trading has its play on here. It's a very typical thing. Well, what's happening is we're relying on the momentum to take us through. And I say it's kind of like backing a horse after it's already run half a race. Does that make sense, guys? Yeah, by buying after it's already gone up, I'm backing a horse that's already run a part race. So I kind of want to get the horse fresh, if that makes sense, yeah? Try and buy it when it comes right out of the gate at the lows or right at the highs, yeah? Sell it at the highs. One of the first things, and it's just something to be very aware of. But then you kind of got to think, right? One of the key things to take away when you're trading, especially if you're doing this for a living, like myself, I'm trading every day. This is my job. I try to think a little bit differently. I try to go to the market and go, well, you know what? If most people are being told by the breakouts, who are they being told by? Who are they being told by? Well, is it in that person's best interest necessarily? I'm just a question asker. I try to look at everything and then take something from it and then look at it in that particular way. It's also like this, some of these classic chart patterns. And again, I've only got a couple of slides, and then we'll go over to charts, and we'll look at this on charts because I think it's the best example of doing it. But as we go through this, you might start to recognize some of these things for yourself and say, hey, you know what? Yeah, I've looked at that. Because anything I've looked at here, guys, I'm no different to you, okay? I've was introduced a lot of these concepts very early on in my trading career. Very early on, and I relied on them, but then suddenly some things started to stop making sense. Let me explain what I mean. You've got 4 classic chart patterns here. Okay, reversal pattern, a head and shoulders, a reversal pattern here in the double top, another reversal pattern, the double bottom, and a cup and a handle, which is kind of like a continuation pattern. Some people go, it's like a bull flag, and there's all these different things you can do. We'll just take a look at these here. One of the things that strikes me personally as being a little off about these patterns here is specifically on here the nature of, again, where the patterns are inviting us to buy and sell. Yeah? Hey there, Walker. Glad to have you here. You guys who just come in the room, welcome. Thanks for joining us. So it's the timing that bothers me, you know what I mean? So let's take the head and shoulders. The classic head and shoulders pattern, I think this is a beautiful one, right? I think this is one of the cleanest looking head and shoulders I think I've ever seen. It's so textbook. If you go onto like a website like investopedia.com, put it in there, you'll get it, you know what I mean? But right, they're selling after the move. It's all very well and good saying, well, here's a great place to sell because now you've got the confirmation of the head and shoulders. Well, I liken that to kind of getting to the party late. I don't like to get to the party too early and be the only one there, but I'd rather be there earlier than later because I want to get there when all the good food's still around, Okay, and when the drink's still when there. I don't want to get there fashionably late trying to be cool and then join after on and there's no food, no drink left, and everybody else is going home because they've already had the party. Do you know what I mean? You can see how I like to do an analogy. I like to socialize, okay? So I use an analogy of a party. Or, just again, being the last one. Just being the last one to the sale, I mean, you've got kind of like, I guess like, Black Friday in America, after Thanksgiving this Friday, in the stores and the internet's open. No one wants to be the guy or girl at the end of the queue. You don't want to be the one at the end of the line going into the store because the people ahead of you are going to get the good stuff and you're going to be left with the stuff that no one wants. It's always about being too late. Yeah. So again, selling after everybody else has sold doesn't make sense because my question is, well, who am I selling to? I'm saying to somebody who might be prepared to buy down there. Is my sell at this particular point, yeah, going to be to the person who sold up here? Am I selling to the person who went short up here and needs to now buy it back? Is my trade somebody else's exit for profit? That's the way my brain works. Is my trade somebody else's profit? Does that make sense, guys? Is my trade somebody else's profit? Because the danger is after everybody's done the selling, you're going to get those reversals, right? Look at the cup and handle again. Buy the breakout. Well, again, did somebody buy down here? Well, yeah, of course somebody bought down here. In fact, somebody with a lot of orders, a big inventory, and a lot of capital was trying to buy tons down here. How do I know that? Well, I know that very simply because the price did not stay here. Then they dipped in here. Then they tried to buy here. Then they tried to buy here. And they tried to buy. Well, they've been trying to buy all the way up. Well, the problem is as the price goes up, my risk is beginning to increase because I haven't got as much leniency with my stop. My reward is decreasing because I'm already giving it away. I mean, it's only like looking at a supermarket like Sainsbury's or Tesco's in Europe, Walmart in the United States. Now, these companies make their money by buying low. They make their money by buying goods at wholesale prices. And the cheaper they buy it, the less risk because they're not putting as much capital at stake. And also the greater reward. The lower you buy it, the less it's got to go down. The higher you sell it, the less it's got to be able to go up, right? And also then you've got a greater profit margin. So I just invite people, to look at the market and maybe, ask themselves the question, was somebody buying down here? Was somebody actually selling up here where this red line is? So why am I being told to sell here? Well, this is the institutions that are kicking these big moves off. And this is where there's a flaw in technical analysis. Because, guys, when do you really know it's a head and shoulders? Somebody tell me. Yeah, somebody tell me. When do you actually know it's head and shoulders? When do you confirm it's a double top? Right, there you go, Ray. Good. After it forms. So, there's no point in looking at it and going, wow. There's a great cup and handle. There's nothing to do with it now. Yeah, it crosses the neckline, as Tommy's saying, after it's happened. Exactly. And that just seems to me doesn't sit right with me. Yeah, it doesn't sit right with me. I'm saying, you know what? I'd rather have it. Now, being aware of these chart patterns, is that useful? Absolutely. If you're willing to buy low and sell high. Yeah? Okay? Well, of course, if you get in too early, it can be a false move. That's what you have a stop loss for. And the irony of this business, after doing this for 11 years, coming up to my 12th year doing it, it's like everybody's looking for some secret to make sure that they're right and not wrong. Well, guess what? It never happens. It's more about common sense. The reason why everybody likes buying here is because there's more chance of them being right. But there's also more chance of them sacrificing a ton of profit potential as well. So if it is a false move, that's what you got a stop loss for, right? But somebody's buying down at these areas, okay? Somebody's buying at these areas. And again, if people, what I always say to people is, it's all about keeping it real simple, guys. If, for example, all of these typical tools worked, yeah, if they were highly successful, let's say it like this. If all of these typical technical analysis tools people were finding them useful and achieving their financial goals in trading with them, webinars like this wouldn't take place, really, would they? Because everybody would just grab these tools, use these patterns, do what they were told to do, and they'd all make money, and that'd be happy days for everybody, wouldn't it? It's almost like when people go, well, what about news? What should I pay attention to the news when I currency trade? Well, I'm like, well, you can if you want. But I said, I don't. And they're like, well, Why don't you? I mean, you're nuts. And I'm like, well, let me ask you a question. How successful have you been by trying to interpret the news on non-farm payrolls day? Well, once or twice I made a ton of money, but then most of the other times I've lost. I've got chopped to pieces. I've got heavy slippage. So I say to them, well, then would it be fair to consider that actually it's not as simple as using the news? Because if it was, you wouldn't be having this conversation with me right now. Right, guys? Again, I'm just trying to invite a different way of thinking. It doesn't really make any difference to me if anybody, changes the way they trade. I don't care. I do like to kind of share some ideas, though, with like-minded individuals with some different ways of looking at it. Just one final example, and then we'll go to the charts, and then we'll look. Okay, so the classic. I mean, I was obsessed with moving averages when I first got into trading. Obsessed with them. I loved them. I was like, well, these things are so cool. They do their little crossovers, and it tells me to buy. And sometimes that can happen. You get your fast-moving average here crossing the slow. You get a buy signal. It comes at about here. You give away this chunk of move, which is okay, and then you get some. And then it's like, well, it's a good trend indicator because the trend is your friend. And at the end of the day, as long as you're above the moving averages, it's safe to be a buyer. If you're below the moving averages, it's safe to be a seller, right? When you run into trouble, though, is when you're trading like here below your 20-period moving average in now a downtrend because we're sloping down on the moving average, and then you get a reversal, or you get your cross on your moving average here telling you to sell, and it then goes up, then it gives you a cross to buy, and when it's going down, and you just get chopped to pieces, chopped to pieces. What is the problem? And I'm not saying that moving averages aren't a great tool. They are a great tool, but they're a good confirmation tool. Do you understand? Answer me this. If you take moving averages off the price chart, does the price still move independently? Yes or no? If you take moving average, yes, it does. If you take the price feed off the chart, are the moving averages going to move? Well, no, they're not, because they're based on the price itself. You heard of like the chicken and egg question. What came first? This is not chicken and egg, is it? It's not chicken and egg. Okay, this is price, and everything else comes afterwards. Okay, now again, moving averages, stochastics, Bollinger Bands, all these things can be very, very useful tools, right? But we have to understand price as well. And the thing I love about price is it's either expensive or it's cheap. And you know what? Some of the greatest traders who I've worked with, my mentors, Sam Seiden, Bob Dunn, Billy Henner, Ed Ponce, all friends on here. This is like a daily chart, I think. Okay, it doesn't matter, by the way, what time frame it is. Good question. It won't matter because that chart could be a chart of anything. The same rules apply. Price is key, supply, demand, and all the traders who I just mentioned, the thing they've all got in common is they're using the price first and foremost. So let's go over to the charts. Yeah. Let's go to the charts for a second. And are you a twin to Sam Seiden? Well, I'm 6'4", and he's about 5'3". So probably not. No. I know you're only joking. Yeah, we don't look anything alike. He's got a few years on me. And let me just try and get rid of this. Hold on a second. As I said, if you missed the start of the session that I was talking about, if you missed the start of the session, what I was talking about just now, Sam Seiden was my mentor. Yeah, Ed Ponce was a mentor of mine as well. So let's take this into account then, okay? And take a look. Now, obviously, what do we do therefore? What do we do? What's one of the best ways of approaching it then? If we're going to kind of strip off the indicators a little bit, yeah? Let's do that. And now, obviously, we can start. Now, one of the things I think is a good idea for you guys to do, and is one of the things is when we're looking at price itself. I'm going to just blow up this 60-minute chart for a second here. This is actually one of my favorite currency pairs to trade on here. You'll see a couple of lines on my charts, and these are some key areas that I've been looking at before. This is one of my favorite currency pairs anyway. This is the pound New Zealand. Is everybody seeing a price chart of the pound versus the New Zealand dollar right now? Can I just check that everything's broadcasting okay? That's great. I just needed a couple of yeses. Very cool. So let's take a little look at the price chart as well, and see, what is it telling us right now? What is it really going to do now? It can be really daunting. When I had my own charts on, my charts looked a little bit like this. Okay, when I first started trading, yeah, my charts looked pretty much like that. Now I've got to say, that looks nice, doesn't it? It looks quite cool if you don't know what you're doing. You've got your CCI, you've got your moving averages on here. But see, this is the point as well, right? This is the point we were making. It can be very damaging to us as traders if we rely on something as simple as just moving average crossovers. You see how we've got this confirmed downward trend when the price is trading below the moving averages, and that's great. But then once we get above that, we don't get above it till here. But then what moving average do we rely on? Because at this particular point, if I move to the right-hand side, we get above the 50-period moving average, but we're still below the 200, which is a much more meaty, much more reliable indicator. But what one do we pay attention to? The short-term moving averages? Do we pay attention to the long-term and say, well, it's still in a downtrend because it's not broken the 200? Well, okay, then I'll be cautious and wait. And then look, it never breaks the 200. Then it goes back into a downward trend. And then it's like, well, it's back below all of these moving averages again now. So it's back to downward trend trading mode. And then look, it's back into an uptrend again now. Wow. You can see why people get a little bit frustrated with it all, can't you? Because there is a challenge in all of this. So one of the things I think is kind of a useful little tool for us is to just strip all that off. Oh, and by the way, looking at like an oscillator like this, yeah, your sell signals worked out for you pretty good here, didn't they? So your sell signals worked out really well in the context of a downward trend, but your buy signals you were getting across here didn't give you anything. Now, what signals do I take? Yeah? And I haven't said there aren't successful traders trading these ways either. Have I said that there are any other that successful traders, that there aren't people? I did. I made a very key point at the start of this session that I'm not here to rubbish or put down any other traders or any other technologies. Did I make that clear to you guys? Yeah? I'm offering a different way of looking at the market. Yeah? Because at the end of the day, there is no perfect way, right? There's no perfect way in all of this. Yeah? So, it's about having a consistency to the markets. So, what should we really be looking for? Let's start to think. If we're struggling on here, why not attempt just a little bit of buy low, sell high? Yeah? Attempt some buy low, sell high approach to it, just using price itself. Exactly. Great point there from her Forex. It's all about how well you know your tool. Well, my tool is price. I like to buy low. I like to sell high. Yeah? So, let's go back over here and get some of this off. All right? Wow, I just feel that that looks so much cleaner, doesn't it? Yeah? So, good points, guys, good points. So, let's just reconsider this for a second, okay? Now, on here, the first step we could say is support and resistance, right? So we could put some resistance lines in place. Let's do that. Let's put some resistance lines in place first and some support lines. Now this is, again, I'm taking you kind of through like my journey on this. Okay. Now, sometimes the ones that have levels that have been both support and resistance. You see this area's been support and resistance as well. Now, what is the danger that we're running into now? See, support and resistance. See, these levels have been support and they've been resistance. What's the danger that we have now, guys? What's that danger? Too many levels, right? Too many lines. Right, Ray. What one do I actually use? That's the problem, because there's an assumption. Now we're always making assumptions. Whenever we trade, we're always making an assumption. Yeah? I would like to think that nobody willingly gets into a trade for the sake of it. Oh, I'll just jump into a trade. I'll just go into something. Well, no. Likely is that you feel that you've actually got, okay, that you feel that you've actually got some kind of strategy on here. Well, this is why I don't like just using support and resistance, because I don't know what one to use. So let's take a look on here and see the areas that the price has missed, like in betweens, right? So now, see, here's the thing. How many of you in the room have tried to get into a trade and then just kind of left it alone and thought, I'm really going to go for it on this one, and end up having a decent profit and then giving it all back? I know that's happened to me, yeah? So I like to trade between key levels of supply and demand, because this way, what's happening on here, by going between these key levels of supply and demand, it's very objective for me to know when to buy, objective for me to know when to sell, okay? And then what I can also do, okay, when I know when to buy and when to sell, it's much easier for me to set my profit targets. So let's take a look at what the chart says, and let's just stay kind of looking at the most recent areas and see what this chart is telling me. Now, if I go up and look, there has been some significant selling pressure in this area here. Like today it hit. Last time prices were here, we fell. We've come back again, we've rejected it, and we've dropped down again. Now, I'm not so keen on this area of supply right now, and the reason I'm not so keen on it is because, we've been to it, we've gone quite deep into it. I'd like to find somewhere where the price is yet to have gone back to. So now let's take a look on here. Let's go a little bit further. Take a look up. And I want to see a real strong drop where the price has not yet been back to. So in this case, I'm going to go over to here now. I'm going to go over to this area here. Okay. Just get my snap mode off here. All right. Yeah, the price hasn't been back here, you see. Exactly. And what I see is a couple of things I'm taking from this particular area. Is the first thing I can take into account is there's a very strong drop in price away from this zone. You see that? We'll talk about trending just a little bit, okay? I'll tell you what's cool about this, Walker, by the way, is as you start to trade levels, you worry less about trend. It becomes less important because it's all about just knowing what your profit margins are, okay? So as long as the profit margins are there, you won't have to worry too much about the trend, okay? So we'll come to that in just a second, okay? So I'm going to look at buys and I'm going to look at sells as well, all right? So good question, all right? Now, let's go back to this. Because at the moment, yeah, and here's why. By the way, here's why I'm not that fussed about trend. At the moment, we've been making higher high, higher low, higher high. But if on this part of the chart, haven't we? See here? But if we look at it that way, what's the trend? It's down, isn't it? Yeah? If you look at a little bit more data, you can say, well, at that point it was up, that one down, right? So what tends to happen is trend becomes very, very subjective. Yeah? Comes very, 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 very subjective, doesn't it? Yeah? Because if you look at that much data, you could say I'm in an uptrend, couldn't you? If you look at that much data, I'm in a downtrend, right? So, the issue that we always have, the issues, well, I'd say the reason you find the levels subjective is because you're probably not used to looking at them yet. Yeah? Because maybe it's a newer concept. At the end of the day, if you can start to use it, and obviously in our classes and what we teach here, the structure, the odds enhancers, and I'm sure if you've ever been on any of Sam's lessons as well, okay, that becomes a way of looking at them and seeing them clearer and clearer and clearer, right? So let's look at this for a second. The question is, the last time price was here, let's be as objectives. Let's be objective about it. Let's be as objective as we can. And by the way, the word subject, to be objective, you kind of got to be subjective anyway, haven't you? Because you've got to decide what is objective. So there's a kind of flaw in objective, subjective anyway. Do you understand? Because you've got to say, well, what do I deem to be objective? So that's a subjective statement in itself, isn't it? If we're really going to get down to the brass tacks of it. So let's kind of skip all that and maybe let's just look at what happened here. So let's ask a question. Guys, did we have a very strong drop in price from this area? Yes, it did. Yeah? Cool. All right. What's my typical routine before I buy and sell? Pretty much what I'm going to show you now, JP, if you just hold on for a sec, yeah? Pretty much what we're going through here. So we had a good strong drop away in price. Okay. Sorry about the typo there. All right. So we got a strong drop in price, yeah? From this particular area. So that suggests to me what? That tells me more willing sellers than buy orders. Yeah. Now, guys, I've had more willing sell orders than buy orders, noted by this strong drop in price. Now, how can I make that statement? How can I make that statement? I can make that statement because if there was equilibrium, if there were equal sell orders to buy orders, would that drop have happened? It wouldn't have happened, would it? It's because so many people were trying to sell. There are a few orders. I'm sure some buy orders got through where it had to be because those sellers had to sell to some buyers. But that's it. So all I've got now to work with is to say, okay, is there anything more that I can take from that? Well, that's all I need to know is that my assumption would be that if the price comes there again, I'm going to take a shot at selling. Now, the question after that is, well, okay, Sam, but what guarantee have you got that there are going to be still sellers there? Well, I don't. I have no guarantee. If I had a guarantee, I would simply be the richest man in the world, wouldn't I? But what I do know is this. I do know that at the time there were more willing sellers than buyers. So if the price does get back there again, it's worthwhile me taking a low risk, high reward shot that there is, because while some people will pass on the trade and go, oh, well, I'm scared to take it, I'm not going to be scared to take it. Because then, yeah, those people who are scared about it, those people who are scared about the trade are going to pass on it because they're going to be trading with their emotions. That's where the emotions come in. See, I treat every trade. I'll answer those. I'm going to get your questions just in a second, okay, guys? I'm not ignoring them, but I will answer them. Is that all right? So just bear with me. Please don't feel ignored. Let me make my point, and then and I'll go from there. As long as the price is telling me what action to take, I just do that. Because other people are trading worried about their emotions of what if I win, what if I lose, and that's fine. I don't care about that. I care about, well, if it doesn't work, I've got a stop loss and I'll lose. But if it does work, I'm going to make money. Yeah. The businesses have guarantees, guys. The businesses have guarantees. Yeah, of course they don't. So do they invest money in their product, in their business, and then stack the odds in their favor? Yes, they do. That's the way I look at it, yeah? So that strong drop in price. Now, one of the questions is, the density. How do you estimate the density of unfilled orders, buy and sell? That's a great question, JP. Well, this strong drop in price gives us a clue. We teach about 12 different odds enhancers in our classes, okay? And one of the very first odds enhancers that we like is this strong drop in price. That tells me there's a pretty huge imbalance because price wouldn't have dropped as far away, because what the price is now doing is it's trying to find the next block of buyers. So the next block of buyers didn't really creep in until this area here, because that was enough to stop it from free falling. Does that make sense, buddy? Yeah? So that's the first thing. Yeah? All right. So that's the things. That's one of our estimates. It wasn't even spend a lot of time here. Do you see there was not a lot of time here? So I zoom in a little bit. Do you see there just wasn't much time here spent in this zone? Well, the fact that there wasn't much time in this area as well tells me there's a lot of competition to buy and sell. Yeah? A lot of competition to buy and sell. So now the next question, which some of you guys are saying, yeah, do I use a limit order, wait for price to come to the level? Well, it depends if I'm a day trader or if I'm a swing trader. I mean, if I was a day trader, I could sit there and wait for it, couldn't I? And I could put in a market order. But then even if I wait for it to get here, okay, I better be sure that it doesn't leave too quickly, because what's that's going to do? If it comes into my area and it touches it and leaves too quickly, what risk am I running then? What risk am I running then, guys? What risk then? I'm running a risk that maybe I'll what? Miss the trade, yeah? Maybe I'll miss the trade, yeah? You got it. Good stuff. Good stuff. So I'm happy to use a limit order, because if I'm confident in the trade, I don't want to miss it. See, the question is, when I take a trade, I'm not going to take a trade unless I'm comfortable with that trade. Does that make sense? I've already defined my risk. I've already defined my reward. And what would my reward be? Well, this is why I'm not worried about trend. My reward would be the opposing demand area. So if there's going to obviously be a demand area that takes it up to my supply area. So if that supply area holds, guess what is going to be my profit target? The opposing demand zone. The level that took it up. Now, if that demand zone is not at least like 3-to-1, I'm not going to be interested. But then I'm just trading between the levels, between the levels, between the levels. And when you start trading between the levels, you get less and less worried about the trend, and you just get more concerned about each opportunity individually as it comes along. Does that make sense? Yeah? But here it takes a long time to return, and what do we do till then? What do you do till then? That's a really good question. Has anybody got an answer for FX Boyke? What do you do till then? Anybody else think they could do it? Yep, you could wait. There you go. Go do something more interesting with your time, because trading's probably the most boring thing in the world. See, here's the thing as well, right? I work an hour a day. I don't trade because it's fun, and I don't force trades. I wait for a trade to come to me, because do I want multiple average trades, or do I want one or two quality trades? What do you think? Yeah? So yeah, you can get all the odds enhancers on our class. You check out our website, can find a way of finding out more about it. Yeah, quality over quantity. Quality over quantity. Yeah. So you could place all your orders during that time. Yeah. Someone else asked me as well, do I leave orders in overnight? Yes, with Forex I do. Forex is the only market I leave orders in overnight because of it being 24 hours. I do like to pull orders at the weekend that haven't been filled, because you can get a gap between the Friday close and the Sunday open, right, FT? Yeah. But in between, from when it opens on Sunday through to when it closes on Friday, I'm happy to leave those orders in because I don't have to worry about gaps. So it's the safest market to do that. Yeah. Okay, you want to get to trade, but what do you do if price stays at the hour level? Well, give it time. Give it time to work, right? Give it time to work. Yeah? Okay. Do I day trade? That is my main living. Yes, day trading futures markets. Yeah. No, that hour I trade the US stock markets. Yeah. I trade the US stock markets. So I day trade stock index futures, and I swing position trade Forex and options. I do everything. So day trade futures for an hour or two a day. Yeah, I've already traded today. I was already done. I was only traded for about 15, 20 minutes today. And then I do all my I set and forget all Forex. I look at the Forex charts for 10 to 15 minutes a day, place the orders and check them again 24 hours later. Because I realize that I haven't got to be there for the trades to work or the trades to not work. Does that make sense? Yeah? Yeah? So those orders that I'm doing, that's based around the time of the day. This kind of stuff I'm showing you here doesn't matter when you put your orders in, yeah? Right? Great questions, by the way. Great questions, guys. Really, really good. Forex daily charts I really like. So yeah, an exit could be an opposing demand zone, yeah? So maybe we're going to get something from here. Now, we haven't had the rally yet, but maybe if the price rallies hard from here, this could be a profit target. So we could have 202.69 to 203.30. It's like a 60 pips there. Okay. But we got a target of 250 odd pips. So that's good for me. I'm happy with that. Yeah. That may be it. There may be a lower demand zone. I don't yet wait. But by the time it gets to that supply zone, I'll know what my profit target will be. Yeah. The Open, Manoj. The Open. The US Open is when I like to trade. Yeah. Good question. What if a trade triggered on a Friday? Okay. I want to get through some of these questions. Okay. What if a trade triggered on a Friday? It depends really what time of the day, but I have a rule. I'm in London, so if anything that's not triggered by 4 p.m. London time, 4 p.m. London time, I pull it because it hasn't got long enough to really work, right? So I'll just pull it at that particular moment and say, oh, well, I'm done with it. Don't worry about it and go back to it. Yeah? Yeah? That makes sense? Yeah, all good? Helpful, yeah? So, I mean, this could be a demand zone. Yeah. Yeah, that's right. That's why I like to pull the trades off on the Friday. Yeah. Pull it, remove the order, pull the trade. Because if the trade's still in the system and the market closes on a Friday night when the broker's open on a Sunday, it can gap. I don't want gap risk. That's what pulling it off means. Yeah. So I could also look at a zone like this for now. See, again, let's be objective. Look what happened. The price was last time the price was here, yeah? Last time price was here, did we rally hard? Well, yeah, there were a lot more willing buy orders than sell orders. So objectively, if the price comes to this area of 199.80, I'd have a stop below the 199.52. Very low risk. And I've got a nice supply zone here, which not as great as this one. So I love the strong move away more than I do the higher ones. And it's got to get to this before it can get to those higher ones too. But I got myself a nice profit target at 201.20 as well. Yeah? So I'm going to wait. Yeah? I'm going to wait as well. Yeah? Isn't the demand zone better, the lower one? The lower you go, the better it's always going to be. Yeah? So that depends. That's a good point. The lower you go, the better it's always going to be because you're going to be lower down on the big picture charts. You can have more profit potential. But the thing is, obviously, it depends on how aggressive as a trader that you want to be. Because obviously, what you've got to factor in and remember as well is if you want more trades, be a bit more active as a trader, you're going to go to the most recent levels. Yeah. If you want to basically be a little bit more of a conservative trader, you're going to go for those further out levels. Okay. Yeah. All right. So it allows us to be objective and stuff. Yeah. Maybe it does go down all the way and doesn't return. So we find the next demand area. See, I'm not going to be stressed about missing a trade. In fact, I'm never stressed about anything because I can't control it. If I don't get that trade, I'll go to one of the other currency pairs and I'll find something else. Never go looking and hunting for trades because the danger of going and hunting desperately for trades means you're looking a little bit more emotionally. If there's not an opportunity that I instantly recognize, then I'm just going to move on and I'm going to find something else. Okay? Yeah? Whatever the size of my zone is. So this zone here would be a 60 pip stop, roughly. This zone here would be about 82 to 55 with a bit of wriggle room, about 40 pips. So it depends on how zone is. I will just literally adjust my position size. Yeah? Just adjust the position size accordingly. How many pairs do I watch? I have a watch list of about 4 FT. Yeah, I just like the ones that have the most volatility, basically, because I like the ones that move. I like this. I like the pound New Zealand because it's pretty much. I like the Kiwi and the Aussie and the pound pairs and a couple of the yen ones. Yeah, that's all. That's all I'll watch. That's it. Yeah. I'm happy to go up to the. I'm happy to go up to the 2 to 3% mark. Yeah, for risk on those as well. Yeah. No, I don't use a UK broker. I use the trade station, a US broker when I'm doing that as well. So I don't. I'm not forcing. I'm not forcing. I'd rather. Do you know what I mean? I'd rather do. I would rather focus on a couple of currency pairs and be very thorough in finding the levels FT than just jump from pair to pair to pair because you can't trade everything. When I managed a fund years ago, I managed a hedge fund, a Norwegian hedge fund for a while, and we looked at so much, it became a full-time job, splitting risk against 18 different currency combinations and taking tons and tons of trades. So I wouldn't say I'm lazy, but I like to just be a little bit more economical with my time. So, if I can get I'm never going to get everything. Yeah. So I just rather be a little bit more consistent with just one market. Does that make sense? One or two markets to start with and build it up because we ended up missing trades and it affected our overall results. Yeah. So maybe just split it down to three or four. It's going to be more than and be consistent on those. You understand? A place on a chart with a lack of supply and demand. Well, a place on a chart with a lack of supply and demand is when you can't see one of these strong rallies up or one of these strong drops down. Pretty much that's it. You'll always find one. There won't really be a chart that doesn't ever have them, but you just might have to be a little bit more patient to find them themselves. Okay? All right, good stuff. Good stuff. Well, I hope that helps. I always find the 45 minutes a little a challenging one, but obviously I want to answer your questions as well, guys. So again, try to just step back from this, look at what the price is telling you. Okay, maybe you can check some of the archives of the previous ones that Sidon and I have done as well. If you want a little bit more information about our core strategy, guys, let me just show you. The place to go is I'll just show you. Go to our website. So you can go to tradingacademy.com. I'll just show you this. Check out tradingacademy.com. And I know he's a Chicago Blackhawks fan, and I'm an LA Kings fan, so that's all I know. I don't know the specific players. Okay. So yeah, go to tradingacademy.com. There's a lot of resources on the website. If you check here, some free online courses, some resources, an education center. It will give you a much better idea. And depending on where you are in the world, you may even want to consider going to one of our workshops. It will just give you a little bit more of an understanding, and it's self-paced, so you can do it in your own time. Another thing to do is you can go to my Twitter page. There's me, and you can join on here. I do like to post a lot of things about the markets and the stock markets and the futures market. So my handle is @SamEvansTrader. That's me there as well. All right, guys. So all way to a little easy way to join in and follow in. All right, guys. Well, no worries. Pleased to be here. Thanks for your participation as well. We will thank you FXCM for having me as well, and I'm sure I'll talk to you guys all before Christmas in my webinar in December as well. Be well, trade well, and keep it safe. And if it's Thanksgiving for you in the States, I know I wish you a very happy Thanksgiving. Enjoy your holidays as well. Thank you very much, guys. Have a lovely evening and take care of yourselves. All right, guys. Thank you very much.